Good afternoon. My name is Casey Roloff, co-founder of Seabrook, and today we're going to share with you two surprising tax benefits that are available out at Seabrook. So before we get started, obviously we are not attorneys or tax accountants, so you want to talk to your CPA or tax attorney about both of these topics. But we just want to share some of these practices that are being used for some people that are purchasing in Seabrook as investment properties. So first of all, what is a qualified opportunity zone? The Tax Cuts Job Act of 2017, with support from local governments, selected areas in each state where the government wanted to encourage new investment to create jobs and stimulate the local economy. Seabrook is located in a qualified opportunity zone and has been since this new IRS code was put into place. Qualified opportunity zones allow someone with capital gains to reinvest in a new construction home in Seabrook and use it as an investment property. If the owner follows the guidelines, they can create a tax-free investment after 10 years. And that's really what this is all about. So if you're familiar with a 1031 exchange, a lot of people over the years have purchased with 1031 exchanges. They've sold an investment property and then purchased a home in Seabrook and then put it in the rental program. This is very similar, but also different. In fact, the Wall Street Journal called this the Opportunity Zone a 1031 exchange on steroids. So we're going to talk about some of the similarities and then some of the differences. The first thing is you can have 14 days of personal use in the home that you want to document. But after that, our homeowners are able to use the home when they are doing maintenance. They could do some weeding or trim the hedges. They might need a contractor to clean gutters or do painting or pressure washing. They might also meet with the property manager when they are actually at the home. So all of those things are part of managing your investment. And it's also time when you are able to use the home when you're actually managing your investment. So most of our homeowners that are using the Opportunity Zone or a 1031 exchange, they just need to document when they're at the home and then also what they're doing at the home to meet the qualifications of either a 1031 exchange or an Opportunity Zone. So unlike a 1031 exchange, you can use capital gains from any sale to invest into a QOZ. So in a 1031 exchange, you have to sell an investment property or a piece of real estate to make the exchange and defer your taxes. What's different about an Opportunity Zone is you can actually sell stock or a business or real estate and take those funds to create an Opportunity Zone. So that's what makes Opportunity Zones a little easier, is that there's 3 different ways that you can actually take funds from other investments and actually invest into a qualified Opportunity Zone. And another big difference is that when you invest in a qualified Opportunity Zone, after 10 years, after you follow the guidelines, all gains are 100% tax-free. In a 1031 exchange, you are basically just deferring tax, and eventually you have to pay the tax. In an Opportunity Zone, again, following the guidelines, after that 10-year period, 100% of your gains are tax-free, which is why this is such an interesting investment tool. So purchasing a home using a qualified Opportunity Zone, again, a lot of people before were using a 1031 exchange. Now people are shifting, because Seabrook is in a qualified Opportunity Zone, they're shifting that investment into a QOZ or a qualified Opportunity Zone because there are more benefits. And that is, again, why this is becoming more visible and more often used when purchasing in Seabrook. So here's an example This is one of our least expensive houses in Seabrook. It's a 1 bedroom, 1 bath. The house is $469,000. So if you were to purchase this home and then in 10 years sell the home for $750,000, that difference between the original purchase price and the $750,000, again, following and assuming you follow the guidelines of the qualified opportunity zone, which your CPA will advise you on, or your tax attorney will advise you on, that gain could be 100% tax-free when following those guidelines. And then again, what's different about an opportunity zone is you don't have to reinvest in a 1031 exchange. After you sell something and and then buy something else and then sell it again, you have to keep buying or reinvesting. And with an opportunity zone, you don't have to reinvest after the sale. You can just take your proceeds tax-free and you don't have to reinvest. So in some cases, people are planning, they'll own an investment property here in Seabrook for 10 years, but they want to retire here, for example. So they'll use it as an investment for the first 10 years while they're still working, and then after the 10-year period, they can take that money and purchase a house for themselves just for personal use, not as an investment, a house that they could retire in or just purely use as a vacation home. But you obviously could not move in to a home that you purchased as a qualified opportunity zone and retire in it, for example. Then you would lose the benefit, the tax benefit. So most of our owners that bought using a qualified opportunity zone, they plan to sell after 10 years and then purchase whatever they want as a personal home afterwards. So in this example, this is a house that's available. It qualifies for the investment because the house has to be new construction and it also has to be a property that's never been rented out. So that's really important to meet the qualified opportunity zone guidelines. So in this case, let's say that you bought for $1,095,000 and then in 10 years you sold it for $1.7 million. That gain is 100% tax-free. But it also doesn't include the depreciation. So you'll have that gain between basically 1.1 million and 1.7, so about a $600,000 gain. But then you also have the depreciation, which we'll talk about in one of these other slides. Now here's a third example. This is one of our live-work units. Again, this qualifies for the opportunity zone because it's new construction. It actually has two sources of income. It has income coming in from the retail space and the residential space. So let's just say you sold that for $4 million after the 10-year period and follow the guidelines. That $1.6 million would be 100% tax-free. And that's, again, not including depreciation that you'd be able to take over that same time period. So very significant tax-free investment when you follow the guidelines. Now, this is George Monroe. He is our tax attorney that has been advising a lot of the people that are trying to purchase a home in Seabrook as an investment property. And he can answer all your questions. So you can actually scan this little QR code. And there's a podcast that you can listen to between George and our CFO, Jeff Gunderson. And they talk a lot about the qualified opportunity zone if you want to dig in a little bit more before speaking to your own representative. So here's the other way that our homeowners use an investment property to their advantage, and especially for tax purposes. So this is what's called new construction accelerated depreciation. And you can do a lot of this in the first year. And this is actually the best time of year. The last 2 months of the year are the best 2 months to actually take advantage of this. So what most people do when they look at depreciation is they depreciate the asset over a 27.5-year period. So $1.3 million house, that's about $40,000 in depreciation each year. Well, the IRS also allows you to do what's called accelerated depreciation. But in order to do that, you have to have a study done that breaks down the home into the individual components, everything from the floors to the countertops, the roofing, the siding. And with that study, you're able to, again, accelerate the depreciation over a much shorter period of time and take advantage of that depreciation at the end of the 10-year period with a qualified opportunity zone. So it's really two things, but together they can be really powerful as a tax-free investment. So here's the same house. This is about $1.1 million. The lot is about $295,000. These are just kind of examples. The home is roughly $800,000. So the traditional depreciation, just if you do it the normal way, you can depreciate about $29,000 a year. But if you use the accelerated depreciation, in year one, you could have up to $320,000 of depreciation if you have the accelerated depreciation study done, which again, the tax accountants and advisors are able to connect you with someone that does those depreciation studies. So in the case of a smaller house, this is again showing about a $200,000 lot and a $270,000 home. And with accelerated depreciation in the first year, which could be even this calendar year in 2024, you could depreciate about $110,000 on the actual asset, the building itself. And then showing a more expensive property, about a $900,000 lot. The depreciation is going to come off of the $1.5 million home. Again, standard depreciation would be about $60,000 a year. But if you actually did the accelerated depreciation, it could be up to $600,000 in that first year. So those are just some of the ways people are taking advantage of some really great tax laws that were put into place to create economic prosperity in communities that need more jobs, more sale of goods to really strengthen the local economy. And that's what Seabrook is doing, creating a lot of jobs. And this really helps that. So now, still, when you purchase in an opportunity zone, you want to make sure that you're buying in a place that has an upward trajectory. And that's why we believe Seabrook is such a great example of a place that you can invest using the opportunity zone because of that upward trajectory. So here you can see our hospitality growth over the last 14 years. You can see even this year we're going to exceed the 2 COVID years when people couldn't leave the state. So we just keep growing every single year. Now, this is significant because the rest of the country, as far as vacation rentals, short-term rentals, bookings are actually down, revenue is down. And if you follow, like, for example, Airbnb stock or VRBO stock, you'll see that their stock is down, and that's because bookings are down. And so the fact that we are actually growing in a period of time that the rest of the country is declining in bookings just shows you how strong the pent-up demand is for a place like Seabrook closer to the Puget Sound. So an average home here in 2019, so this is just an individual home. We track this very closely because we don't want to have saturation. The numbers suggest that we will never be able to build enough units to support the greater Puget Sound in our state, as far as like the beach town itself. But we still want to track this. So in 2019, the average house generated about $41,000 in top line revenue. The homeowner keeps 63% of that revenue, which allows them to help subsidize the homeownership, mortgage, repairs, all those things. And then you can see in 2020, pretty flat. Then it spiked, of course, in COVID. And then today, or by the end of the year, we're going to be at about $60,000 average top line revenue per home. So if you take the 2 years of COVID out, which were very much anomalies, the average income increase per year per home is about 10% of annual increase, which is very good and very uncommon in kind of the short-term rental world right now. That's a really strong growth. And again, it would be higher than 10% if we included these 2 years, the revenue in these 2 years above that line, but we're not doing that. Some other insider tips for people that are using their home in Seabrook as an investment. Of course, we talked about the opportunity zone. The other one is philanthropy. So a lot of us go to auctions and special events for special causes that we care about. And instead of getting your checkbook out each time and writing, bidding on an auction item or making a large donation, our homeowners are actually able to donate their house on a weekend or for a week, and instead of getting their checkbook out. So they're actually leveraging their home in Seabrook to use for their philanthropy, which is just one smart way to use your vacation home and investment property. The second thing that people do is property trades. In fact, today I had a tour, and they had a house down in the Willamette Valley in wine country, and they had traded with one of our homeowners for a house here for the weekend. They were actually from San Francisco. So a lot of our homeowners, if they're going to, say, Whistler or Hawaii or San Diego, they're able to trade their house here in Seabrook with another vacation rental in another market. So they actually use, instead of getting their checkbook out or their credit card out to book a vacation, they can actually trade their home for another vacation home and investment property in another market. So Seabrook has been this, very slowly and quietly town in the, being built and actually evolving over the last 20 years. So our data shows that less than 5% of the Puget Sound population in the state of Washington have physically been in Seabrook. Our job is to get the word out, which is why we're doing a lot of new things to get the word out. And the next 5 years are going to be really exciting for us because of the exposure we're going to be getting, which I'll talk about here in a minute. But we're just at the tip of the iceberg. So we've had all this growth, but it's a very small percentage of the population that's physically stepped foot in Seabrook. We also know that last year, 88% of our guests were return guests. So once people come out and experience Seabrook, the vast majority of the people that will also come back the next year and year after year. So to put it in perspective, Carmel, California is a 700-acre oceanfront town. It's 119 miles from the #1 U.S. median income in the country. Seabrook, and a 700-acre oceanfront town in the making, is 138 miles from the #3 U.S. median income. So this is the closest thing to a Carmel moment our state's ever going to have. There's no new oceanfront towns going to be built, and probably in our lifetime or even the next lifetime, because the property really doesn't exist to build one of these, nor does the infrastructure, public sewer, public water, those utilities. It's very difficult to get that approved in itself, let alone to find the land and get all the entitlements and approvals. So this is a kind of a once in a lifetime opportunity, we think, as far as buying into an oceanfront town that's going to be the Carmel of our state over time as we continue to build it out. And we're not the only ones saying that. If you look up articles from Forbes, Travel and Leisure, they're making that comparison, that Seabrook comparison to Carmel and other great beach towns on the West Coast. But the big changes over the next 5 years are what really are going to take Seabrook to the next level. Of course, if you've been here recently, you've seen our new grocery store. It's about a year old. Huge game changer. It makes it a lot easier to vacation out here. You don't have to stop at the grocery store, but it's also making it a lot easier to live out here. So while we've become a vacation place over this first 20 years, the goal was to get to a point where this is a place you could actually live full time. And adding the grocery store, we also have a new commuter shuttle for people that need to work a couple of days a week in the city at the corporate office. We can shuttle you. You can be on Wi-Fi the whole time. I use it all the time. It's great to get to the airport or to just get into Seattle or Bellevue. I can Uber from the stop and then get to wherever my meetings are, and I don't need to drive into town. Also, we have a $30 million fund that's approved from the state of Washington, signed by Governor Inslee. And so the school district is making their final decision on where the location of the new school is going to be. But that $30 million was approved and signed into a bill a couple of years ago. So that's going to allow more people to live out here, and then young people raise their families. You know, our dream was to raise our family on the Pacific Ocean in a walkable town where our kids had that independence and that freedom. We've had to be kind of pioneers. There wasn't much out here. There was no grocery store, you know, and we had an old school and an old system. So now with a brand new school, grocery store, medical, all these things, it's going to allow families like ourselves to actually, you know, raise our kids out here and live a really high quality of life, which is what Seabrook is all about. And again, doubling the town center for the over the next 4 years, we'll be doubling the size of our town center. So it took 20 years to get to where we are today, but it's only going to take 4 more years to complete the town center and double the amount of shops and restaurants, which is really going to make Seabrook, you know, blossom into the town that we've been dreaming about for the last 20 plus years. Also, I mentioned that our job is to get the word out about Seabrook, and we couldn't be more excited about our new partnership with Windermere Real Estate and the Jacoby family, the owners of Windermere Real Estate. They have embraced Seabrook. They are so excited about this town in the making. And our new real estate office is going to be a Windermere office. And the goal is to actually have 1,000 new Windermere agents to Seabrook over the next 12 months. And we've designed a portal for them to actually enter in their clients and share Seabrook with them. Because again, most people have never been here. So we expect this new partnership could double our sales. We've had about 3 salespeople in our sales office for the last 20 years, and now we're plugging into the network of Windermere, and it's already been amazing the amount of exposure we're getting from Windermere and their network of about 7,000 agents that are a part of Windermere. So we're really proud to be an office now and be a part of the Windermere family. And again, it's just going to bring more exposure and more people out to Seabrook. And so if you think prices are high today, come back in 5 years, because when all of this is done, over $100 million of investment between our town center, the new school, the medical center, and then a community center, all of those things are going to make Seabrook a place that, again, was only thought of as a vacation place to a place that people want to live full time, raise families, retire, and again, have multi-generations of people living here out next to the Pacific Ocean. So thank you for taking the time, and you can scan this QR code to schedule a time to meet with one of our amazing sales agents. Holly, Megan, Linda, Taylor, Belinda, they are all great. They work as a team, and they are here to serve you and help you find your ideal home in Seabrook, whether it's today or whether it's tomorrow or next year. They want to help you find the right house. So thanks for taking the time to learn about some of these tax incentives for purchasing as an investment property. And we hope to see you out at the beach soon. Thank you so much. Pause. I feel good.